Hi everyone, Larry Bailey here with Mortgage Workflow Partners. And if you can tell, my voice sounds a little bit like Bobby Brady. I'm going to go ahead and do my best. I'm just getting over a sinus infection and I'm going to make this sound as smooth and sexy as possible. As always, this information is brought to you each week. We do a market review. It's brought to you from the Mastering Encompass series. If you're serious about wanting to master your Encompass platform as an administrator or as a user, head over to masterencompass.com, check out what's available. We're taking on new students every day, so go ahead and check it out. Getting into the data here, this is for the week of November 25th, 2024. There is a cornucopia, to use a Thanksgiving term, of data to go through. These stories abound as follows. Progress stalled on inflation is the first story, followed next by hurricanes. Higher rates hurts home sales. Next story is pending home sales beat estimates. The next story is home price gains continue. Next story is third quarter GDP holds steady at 2.8%. That story is followed by continuing unemployment claims continue to rise. We're going to have the family hack of the week. We'll check that out. And then we're going to talk about what to look for this week, first week of December 2024. Getting into this first story, we've got progress stalling on inflation, and you can kind of see the way that this chart looks, how it kind of slowly dips down, then it pops up here over the last review. If you're not seeing this, by the way, make sure you head over to our YouTube channel to check it out. That's Mastering Encompass on YouTube, or you can go over to mortgage.community and check out the video there. So the information follows through. It talks about October's personal consumption expenditure. That's the PCE. It's the Fed's favored measure of inflation. It showed the headline inflation rose 0.2% from September, while the year-over-year reading rose from 2.1 to 2.3%. This favored measure strips out the volatile food and energy prices. That rose 0.3% monthly, with a year-over-year reading increasing from 2.7 to 2.8%, remaining near the lowest level in almost 3 years. The bottom line here is, while annual inflation did move higher in the wrong direction, the increase is partly due to lower figure from October 2023, which removed from the rolling 12-month calculation and replaced with October 2024's 0.3% reading. Looking ahead, readings from January through April are higher comparisons, also meaning progress lower towards the Fed's 2% target may be easier next year when these figures are replaced. It's been a while since we actually talked about this part, but remember, this is always rolling average. So if we have a really high mark from 12 months ago, like we saw, and this is what it just said, like where we see January through April of 24 is going to be replacing January through April of 23. We're going to see this number kind of pop down pretty quick. We'll see. At least that's the plan. Getting onto this next story, hurricanes and higher rates hurting new home sales. And you can see that the new home sales kind of fell like a rock. And what we see here in the information is new home sales, which measured, again, this is the signed contracts, right, on new homes. It fell 17.3% from September to October, with a 610,000 unit annualized pace reaching its lowest level since November of 22. Signed contracts were also 9.4% lower than they were in October of last year. On the inventory front, there were 481,000 new homes for sale at the end of October, which was up slightly from 471,000 in September. However, it's important to remember that only 113,000 of these guys were actually completed. The others, they were either under construction or maybe not even started. So more available supply is obviously still needed. The bottom line on this is almost the entire decline in October's signed contracts came in the South, which all this South was severely impacted by hurricanes, we know, for both Helene and Milton during this time. In addition, rates moved higher, mortgage interest rates moved higher. They continue to move higher slowly but surely. And this will not only scare some buyers away, but also situation comes up where buyers no longer qualified because rates have gone higher. And so, all this put together is just leading into lower home sales. Some folks also kind of sideline their decision based upon the presidential election. So we'll see where this goes. The next story that comes up, pending home sales beating expectations. So we had new home sales kind of falling, and then you had pending home sales beating expectations. These are signed contracts on existing homes that rose 2% from September to October, per the National Association of Realtors, that's the NAR. This marked the third consecutive monthly rise in sales, where they were also 5.4% higher than they were a year ago. The bottom line here in this story is contract signings rose across all regions of the country in October, per the NAR's chief economist Lawrence Yun, went on to note that, quote, home buying momentum is building after nearly 2 years of suppressed home sales, close quote. Yun added, quote, even if we have mortgage rates modestly rising despite the Federal Reserve's decision to cut short-term interbank, really should be intrabank, but interbank lending rates in September, continuous job additions and more housing inventory are bringing more consumers to the market, close quote. I don't know. Listen, Lawrence Yun is way smarter than me, no doubt. But I challenge the notion that the Federal Reserve's cutting short-term rates really should impact mortgage lending. They don't. They're not tied together. So that's an interesting perspective. Short-term interest rates could help builders become more profitable if they built in more homes because they actually do short-term lending. But we all know mortgage rates are not tied to the Fed. Like we talk about this a lot, so I'm not quite sure what Mr. Young is talking about. Maybe he can give us more details next time. Next story is home price gains continue. And so we see a chart on here from Case-Shiller, and we can see that we had a little drop in June and into September. So home prices nationwide rose 0.3% from August to September after seasonal adjustments per the Case-Shiller Home Price Index. That helped home values reach an all-time high again, now for the 16th straight month. Home values in September were up 3.9% higher than a year earlier, following a 4.3% gain in August. Case-Shiller's index is considered the gold standard in tracking the changes in residential real estate values. The Federal Housing Finance Agency, that's the FHFA, their house price index also showed home prices rose a seasonally adjusted 0.7% from August through September, and they were 4.4% higher when compared to the same time last year. Note that the FH index does not include cash buyers or jumbo loans, right? Federal Housing Finance Agency, those are the conforming loan limits, and only loans with finance with conforming mortgages, conforming loan limit mortgages, which accounts for some of the differences in the reports. The cash buyer definitely, but I'm telling you right now, the Fannie Mae loan limit for 2025 is over $800,000, gang. $800,000. It's wild to me. It's like literally wild. I remember when that was like 147,000. Yes, I'm not old. Bottom line in the story, gang, is while home prices are continuing to appreciate, the pace is slower than the year earlier. However, home ownership continues to provide a significant wealth creation opportunity, and if mortgage rates come back down, this could drive demand and potentially reaccelerate home price gains, given that supply also remains low on a historic basis. Okay, let's get into the next story. The third quarter GDP holds steady at 2.8%. Now, it's important to remember we're in December, right? So why are we talking about the third quarter? So this is the final reading. And the U.S. economy grew by 2.8% in the third quarter, per the Bureau of Economic Analysis second quarter estimate for that time period, matching their first estimate reported. Oh, I'm sorry, this is not the final. This is the second estimate. Sorry. By comparison, we saw 3% and 1.6% growth in the second and first quarters of this year. So economic activity in the third quarter was driven by consumer spending, exports, and the federal government spending and business investment. Note this data is subject to revision when the final reading is released December 19th. That's the final reading of the third quarter. My bad. So second reading for third quarter GDP held steady at 2.8%, which is good. It's good to hold steady. We don't like to see these ups and downs after estimates are given. The next story is continuing unemployment claims continue to rise. So this is not good. Initial jobless claims inched down 2,000 in the latest week to a 7-month low, which is good, with 213,000 people filing for unemployment benefits for the first time. However, continuing claims rose by 9,000 as 1.907 million people are still receiving benefits after filing their initial claim. It's concerning. Bottom line here is while the low level of initial claims suggests that businesses aren't cutting many jobs, the rising number of people remaining on benefits suggests that jobs are becoming harder to find when people become unemployed. This elevated trend in continuing claims has been persistent, as they have topped 1.8 million since the start of June So this is 25 consecutive weeks. And by the way, last week we hit 1.9 million for the first time. So 2 straight weeks at 1.9 million. 2 is not a trend. 3 is a trend. We'll see what happens next week. If you're at this point in the video and you're watching, you'll see the Family Hack of the Week recipe online. National Brownie Day is December 8th. It's in 6 days. So if you're interested in this beautiful cocoa brownie recipe from the Food Network, head over to YouTube, check out the video, and you can see the Family Hack of the Week recipe here on screen or in Mortgage Talk Community. Here's what we're looking for this week, gang. The labor sector will take center stage with updates in job openings on Tuesday. Private payrolls are on Wednesday. Unemployment claims are Thursday, and non-farm payrolls and the unemployment rate are Friday. So we'll see what happens. And I'm always going to tell you that one thing is constant in the mortgage industry, which is change. And also, having said that, the Encompass platform is always in the midst of change. Be prepared. We have a huge update happening across almost all of the ICE mortgage technology offerings that involve the Encompass platform. So this is the Encompass Desktop, Encompass Web, TPO Connect, Consumer Connect, and some others I can't even think of right now. It's about over 300 pages of release notes being updated. I've shot release notes walkthroughs. I'm going to do my best to see if I can call out any additional changes that are happening here for our weekly meetings happening every Tuesday at 4 p.m. Eastern. I guarantee I'm going to miss something because I think they're still changing. I have to go look. Anyway, make sure you're watching your release notes. Stay on top. Make sure your teams know that Encompass is updating this weekend and Encompass may not be available, or the performance may be unexpected or unusual depending on the state of that update. If there's anything ever I could do to help you out, please reach out. If you ever want to find out more about Mastering Encompass, head over to masterencompass.com, sign up for one of our coaching and training sessions, and improve your day, improve your life, improve yourself, improve your company. Thanks, guys. We'll catch you next time. Bye-bye.